start off, before I ask you about the earnings, I understand that you've resigned as CEO with effect from the 31st of October 2015. What is the reason for the resignation?
Well, it's a personal choice to follow a more flexible professional career going forward. So I'm very happy with the way the company has performed and come up to where it is today. So this is more a personal decision.
Okay, Mr. Venkateish, good afternoon. You have really taken company to good heights, so we wish you all the best for your future endeavors. But since this is your last boardroom, I'm assuming, with us on CNBC TV 18, if you could tell us, what happened in last quarter, and going forward, what kind of run rate do you think Dish TV will be able to achieve?
Well, traditionally, quarter two for all DTH companies tend to be a seasonally weaker quarter because of the monsoons and things like that. And this year, particularly, if you look at this quarter, was coming in after two strong quarters of cricket season, so the comparisons were likely to be muted. But we are very happy that even in a seasonally light quarter, we've managed to show strong subscriber additions. We added 338,000 subs, so that puts us squarely within the range to achieve our overall full year guidance of 1.5 to 1.7 million, because we have done close to about 740,000 subs in the first half. And typically the first half accounts for about 45 to 46% of the business. So we were quite happy with the way the business has progressed. On the ARPU front, yes, there was a little bit of a disappointment, but primarily that was due to extraneous factors. As you know, that the service tax was increased from 12.36% to 14%, so that had the impact of biting off about 1.64%, or close to about 14 to 15 crores from our top line. So if we didn't have that impact, our subscription revenue would have been closer to 707 crores, which is close to what the street guidance was. So that's a temporary blip, because coming into the next quarter, the comparison will be like for like, and that should be adjusted. Overall, there's good momentum in the business, and we are hopeful that if digitization is on course, we should have a very strong fourth quarter. And the third quarter is always a good quarter because of the festive season. So overall, I think we are looking for a strong performance in the back half of the year.
Okay, I'll come to your earnings in just a bit, but sorry to keep coming back to this resignation. Not just you, but there have been multiple resignations that have happened in the company today. Mr. Mintu Bhandari, who's the non-executive nominee director, Mr. Utsav Baijal, who is the alternate director to Mr. Bhandari, Mr. Subhash Chandra has also resigned as non-executive promoter director. Is there something that the shareholders need to worry about? I mean, why multiple resignations at once?
So as far as Mr. Mintu Bhandari and Mr. Utsav Baijal are concerned, I mean, they were representing Apollo Investments in our board, and Apollo, as you know, has exited Dish. So I presume you can draw the correlation there. As for the other promoter directors, I wouldn't be able to make any comments on that.
Okay, but would it be safe to assume that everything is all right and there's no cause of worry, as Sonia pointed out? Again, because the stock is down 2%, while the numbers are quite okay. So that's why, maybe there's a bit of a worry.
No, nothing at all. I mean, board appointments, shuffling board are normal practice in the company. I don't think you should read unnecessary things into that, so to speak.
Okay, so any idea of who will be taking over the reins from you? Who will be the next CEO of the company?
No, that is up to the board and the managing director to decide. At this point of time, I'm not privy to any of their thought process on that.
All right. Getting back to the numbers then, you were telling us that the company will manage to meet its guidance of 1.5 to 1.7 million by the end of the year as far as subscription addition is concerned. But what about the ARPUs? This time they've fallen to about 171 versus 173 last quarter. What's the expectation for the second half of the year?
That's right. See, we had guided for a 6 to 7% ARPU growth, Now, if you take the impact of the service tax increase in Qs quarters 2, 3, and 4, so if you take that out of the picture, I'm pretty confident that we get to that 6 to 7. But on an as-reported basis, you'll have to account for that additional 1.6%. So I believe in an as-reported basis, the ARPU growth will be more like between 4.5 to 6%.
Okay. Mr. Venkatesh, what about pricing? We have seen consistent price increase over the last few quarters. Do you think Dish TV still has pricing power in future? And will we see further price hikes?
Absolutely. No, absolutely. Actually, it's not only about Dish TV. As you're looking at the entire environment, there is more stickiness. As you've seen, the overall churn numbers are also coming down. As well as with digitization, we have seen that in all areas where there's been digitization, the ability to move prices up strengthens, because the churn out of a digitized environment is far more difficult than churning out from an analog environment. So I'm very confident that the trend of price increases that we've been able to sustain for the last 4 to 5 years, effectively being able to take about two price increases a year, typically one around March, and one around the festive season, of 4 to 5%, will sustain. And also the HD penetration is increasing, so that should also give some momentum to the overall ARPU movement.
So what are the HD ARPUs this time, and how much will they grow to?
Our HD ARPU for this quarter was about 407 rupees. Okay. It's been more or less at that level, between 407 and 415, because we got increased volumes now than we had 2 to 3 years ago. And with increased volumes, you tend to have slightly more, let's say, a mix in which there are a lot of people who are trying HD for the first time, so they come in at the entry-level pack. But having said that, that's a very healthy ARPU when you compare it with the blended ARPU, which is at about 171. You're effectively getting almost 2.5x with the HD subscribers. Okay,
2 questions then. How much is your incremental market share, for example, in the last quarter? And what kind of ad spends do you have to incur now? Because your competition, 3 or 4 players, have been quite aggressive.
Our incremental share in the last quarter was 27%, which is the same as what it was in the previous quarter. As far as ad spends is concerned, we tend to spend about 3 to 3.5% of our top line on total marketing, above the line as well as below the line, out of which about the split is roughly 50-50. We've been able to sustain our growth momentum with these kind of spends, and we aren't actually seeing too much spending yet. But having said that, with digitization around the corner, you could see a spike in spending in November and December. We too have our own plans to step up our marketing investments ahead of digitization, especially in those markets which are coming up for digitization.
Okay, well, your operational growth has been spectacular, Mr. Venkatesh. Your EBITDA itself has gone up by about 57%. Do you think this 34% margins that the company has delivered this quarter, do you think it's sustainable?
Oh, absolutely. I think the way this business P&L is constructed, you generally find that the middle line is fairly sticky, because the biggest item in the middle line is content cost, which tends to be fixed in nature for a period of time, at least during the time of your deal. And the only variable element in our middle line is really to do with the taxes, the entertainment tax and the license fee component, which put together is about 18%. So out of the total middle line of about 50%, you got 32%, which is fixed. So you have strong operating leverage. So the EBITDA margin will tend to move along with the move in the top line. So the key thing is to keep the momentum on subscriber additions, the momentum on HD acquisitions and ARPU growth going, so that you get the momentum on the top line that automatically translates into higher and higher EBITDA margins. So I do believe 34% is not where we're going to stop. We certainly have room to improve. Plus, I'm not even adding the external factors. For example, if the license fees are reduced by the government, There's the TRAI recommendation on that for a 2% reduction, plus the whole thing about the GST coming in, and on that we could look for another 300 basis points. So the external factors which could give you between 300 to 500 basis points plus the operating leverage in your business. So certainly there's room for the margins to grow.
Okay, Mr. Venkatesh. Finally then, what next for you after the stint at Dish TV?
Well, I'm thinking of a few projects. It's a little early for me to spell those out, but I'm not going to be idling for sure. Right.
All right, all the best for whatever you take up next, and we hope to keep speaking with you at regular intervals. Thanks so much, Mr. Venkatesh, for